Good morning, good morning. How are we all doing? All good? I hope you guys are well. Who have we got in the chat today? Let me know if you can hear and see me okay. Angela, you all good? How are you, brother? Looking forward to Christmas break, I hope. Is picture all right? Is sound okay? Just let me know. All good? All right, brother. Let's crack on, shall we? Can't wait to turn this laptop off. Yeah, I'm looking forward to a break as well, man. It's going to be good. Mel Saheli, thank you very much. Okay. So, couple of things today. Right. I've pulled a couple of these across. Just give me 1 sec just to set up some things here. Okay, so we're going to look at BTC to start, then ETH, some of the alts, and then we're going to do a quick Q&A session. I've had a few DMs that have sort of plopped up over the last few months, so I wanted to clear them before the year end. And yeah, they'll make for good educational pieces anyway. So yeah, it should be a good little educational session. BTC. Okay, we're back into, we're still in weekly demand zone. As you can see from the line I just deleted. Been hoping for a final push really for some time. I was seeing a lot of like relief bouncing here, higher time frame, low being put in, higher low when we were up here. And I was saying to people in my Discord group, look, essentially there's a lot of sentiment flying around about, you know, bounce now, etc. But we're still here. Tapping into the midpoint on the RSI. Now, if you don't use the midpoint on the RSI, please start doing so. It is one of the most incredible tools that I use. Just put a tweet out illustrating this on Zora, actually. You can see here. So, like, if you're going to stick to any time frame, the daily is great. Okay, for this tool, for this system. And yeah, it's a really useful. It's a really useful metric, especially in terms of joining trends. Okay, so you can see here, every time price tried to come back up on Zora, a little bit of relief here, it hit the midpoint RSI, as you can see here. So it come up to the 46s, then down again, then up, and hit the midpoint exactly here, down again, then up, midpoint exactly here, and then down, and is now broken down. Okay, so they're really good. It's a really good tool to use when you're like anticipating breakouts or breakdowns. But likewise, an equally strong tool just for joining trends. You know, this is clearly a downtrend here, right? All of this is downtrend, and if you want to join that trend, then it's a very, very useful piece of Confluence that you can use. And we'll talk more about Confluence a bit later on because some of the questions I got were regarding Confluence. Let's get rid of the stock here and put the good old AO up. Okay. So, yeah, BTC, I mean, at the moment, I've really just got the daily chart up. I've got the 4-hour chart up. Okay, so maybe we can do a quick top down, but there's really nothing to do. Monthly hovering around mid. Okay. So good look here, right, in terms of monthly. As long as we hold the mid and don't lose the mid, then all good. Weekly. Not much to say, right? Still tapping into this weekly demand zone. 3 taps in now, 3 or 4 taps, but all locally, okay? 3-day is the primary time frame that everyone should be looking at, really. Like really what I want is one more push down, okay, and for this 3-day divergence to lock in, okay? So low here, on price, high low on the oscillators, but I really want to see something like this. Even just like a flat bottom would be really nice. Okay. So price comes down, and then we get that second leg of the divergence nicely overextended. Okay, AO won't really budge. Okay, something like this. That would be the ideal play. Okay, a well-formed divergence on the 3-day. That being said, okay, we're already starting to technically show signs of divergences here, because we do have the oscillators diverging against price, technically speaking. Okay, and if this green candle locks in, then we do technically have the divergence confirmed, because there's still just a low on price here. And then if we get this green candle, excuse the Heiken-Ash, I'm using that for equities at the moment. If we do get this green candle, then it's technically the div locked in. Okay, technically speaking. Personally, I do want to see one more push lower. As I said to you, Angelo, in the cord, I want never gets. Well, we'll have to see. Okay, we will have to see. ETH still really mucking about in terms of this pocket of weekly demand in here. Okay, so again, tapping into its weekly demand as BTC does so as well. And yeah, it's at the moment we're getting some decent reactions and touch points off of that liquidity zone. But yeah, yet to be seen whether we do get that push or impulse higher. We're still at the moment, sort of drifting down off the back of the deviation that was put in here and the 2-hour divergence. Okay, we spoke about this last stream. Lower highs, higher highs, and then deviation locked in. Super nice trade here. Missed the trigger. 2 triggers here really that could have or should have been taken by myself or anyone that's using my system. Number 1 would have been div confirmation candle. We always want the div confirmation candles to be strong and forceful and not questionable. Okay, so we don't just want like a doji candle or a candle which sort of doesn't really present itself with much force. This here is a strong, forceful candle. So that would have been the first opportunity for the short. The second would have been here on the deviation. Okay, so 2 separate sort of triggers here, but both equally merited. And I was having drinks with an old friend, so didn't manage to catch any of these. Okay, but just been watching price move lower. I'm net short across the board anyway, so still profited indirectly from this move as well. Okay, so we can run through some of the alts. What do we want to look at? So hype, still short hype here. Where are we? Yeah, so still short hype on this. The loss of this key daily level here was a simple play, and looking to ride this down to lows unless we start to get that next push down on the 3-day divergence BTC that locks in again with a forceful candle to the flip side. Also want to see some strong delta as well present itself ideally. Yeah, market feels and looks very heavy at the moment, so letting the trend do its thing, letting the trend do the work for me, generally speaking. And I don't expect that to be much volatility across the Christmas and New Year period. There tends to be very little. So unless things drastically change, happy to sort of hold on to positions at the moment. Short hype, short H bar, although very early days on H bar. Here. Very early days indeed. You can see that I've taken a very wide stop, very low R trade here, just because I wanted to protect myself for any fuckery, any volatility, any spikes to the upside, cater for a shadow sweep of the 15564s. And yeah, You know, I trade very much in the absence of greed at the moment. It's something that I've sort of honed over years. I'm very patient, as you guys know. I operate on the higher time frames to stack the probabilities in my favor. I take wide stops. I take relatively low size for my account. And you know, all the stuff that I preach and teach to you guys, I'm doing myself. So yeah, nothing is said, you know, by the voice of a charlatan. Everything that I'm doing is the stuff that I'm teaching you guys, and ultimately that's the way that I want you guys to be operating as well. Okay, what else is there? Zora's just lost a key level here. We're just looking at Zora, obviously. So interesting play here, potentially like a breakdown here. So we can take this low here on the daily body, right, which lines up with this low here, and then maybe these lows here, and that looks like a clean breakdown on Zora. So I mean, I'm pretty much exposed on the short side as much as I want to be. I'm hitting my open risk quotas, so I'm probably not going to move into Zora. Taking an XRP position as well. I believe this is slightly underwater at the moment. Right, this was last night. Oh yeah, just a bit. That's loss of this 3-day level here. Okay, so loss of this 3-day level. You can see the clean close underneath these candles using the 3-day bodies. Again, you know, just playing the breakdowns, very simple plays, low confluence, just looking for the close, looking for yeah, resets essentially, which we have, you know, prior to the break here. Multiple taps, same thing as Zora on the daily to the mid, exactly the same pattern forming, and consolidation as well here prior to the breakdown, right? So the only thing that could fuck up these trades is BTC divergence situation, which I'll be keeping an eye on. If I have to cut these for a loss, or cut them for a small win, or cut them break even, then I'll be doing so. You probably won't get those updates, guys, unless you're in my Discord, and even still, you may not, because I don't like to influence people if they're in similar positions. But yeah, we'll see how things play out. And really, eyes are on the 3-day divergence. But until that locks in a sense that I can say so very confidently, which we're not at the moment, then I'll keep holding on to my short exposure. And look, guys, you know, the markets are pretty bleak at the moment for any participant. Okay, whether you're a spot investor, you know, capitulation left, right, and center. You know, people that thought we were going to have an alt season have now been slowly exiting their bags over the last few months. I wanted to pull this up as well, just to see how bad sentiment is at the moment, right? So I flicked through the timeline yesterday. Sentiment really does seem at all-time lows. I've been here for way too long, and it feels very, very heavy. It's one of those rare moments where it feels very heavy. People are walking away from the space, left, right, and center. So I just want to say, if you're tuning into the stream, if you're looking at the charts still, if you're trying to still hone your edge in the markets, then give yourself a pat on the back. If you're, yeah, even if you're just tuning into the stream, give yourself a pat on the back, to be honest, you know, because those that make it and those that profit do so in times where, you know, shit is quiet, shit is bleak, and they're still sticking about. And that doesn't mean you're trading, right? It just means that you're still here, you're still turning up. I put a tweet out the other day saying, even if you're just here, just scanning the markets every day, even for 5 minutes, right, then you're doing two things. You're not operating in a black and white sense, where that's what most traders do, and it's a real pitfall for new traders, right? Where they, and this is me all over years ago, okay? So when I first started, I'd either be fully on or fully off. You know, I'd be scanning the markets all day long, or I'd get blown out, blow up an account, and then take, you know, weeks or months off. Well, it was never really months or weeks, more like days. But still, like, you know, if you're turning up and just, you know, trying to sort of eradicate that black and white mentality, and at the same time exercising your discipline. You know, people like Angelo, I've seen you in the Discord doing that. You know, you're moving towards the higher time frames, moving towards the higher validity setups, increasing your discipline day in, day out. And yeah, respect for that, man. That's the good stuff. It really is. I say it over and over again that all of these, you know, P&L, equity curve, all of that is a lagging indicator, and what comes first is the, you know, the important stuff that you form in your mind, you know, increasing your discipline, increasing your stringency, your patience, you know, mustering that inner strength to keep going, that grit to keep going. All of that stuff is the important stuff that you should be focusing on. And the profits and wins, they come later. Okay, that's how it works. So yeah, good going if you're still here. Okay, so what else can we look at? Not much really. There's not really too much to update since the last stream, to be honest, because price is still knocking about in the weekly zone. We're still looking for that 3-day play out. Okay. So I'll move on to some of the educational stuff now. Okay. And it should be fairly decent. What's up, T? How you doing? I'll take a question from you first. You got one here. If I can take one A+ setup per year with increased size over 100 mid probability setups, I'd take that any day. Oh, okay, sorry. Well, that was a question. Yeah, as you should. As you should. All right, let's crack on and dig into these. I won't name names of the people that have asked these questions, but we'll keep it anonymous. I see sometimes you use scaled orders, but you also say that you rarely operate in limit order form. Okay, there's not much of a question there. But I think what you're asking is, you know, when do you use scaled orders? I can sort of cover this generally speaking. So when I say I rarely use limits, that's actually not true at all. What I mean is I'd never use blind limits, or I rarely use blind limits. Okay, blind limits are where, let's say, for instance, here on BTC, blind limits would be when you place a limit like this and go, okay, cool. Well, I've got my ask here at the 1278. Okay, I've got to stop here and take profit down here. And I'm looking for price to do something like this, move into my limit, fill it, and come back down. So I never do single limits, right? I'll never place single limits in a blind sense. I rarely use scaled limits in a blind sense, okay? So what does that mean? It means that if I have very, very, very high conviction that price is going to move into a level, take it out, right? It's almost always with a sweep or SMP. Then I will scale bids or asks in order to cast a net or a trap to catch price, and get sort of incrementally filled as price moves past that SMP, swing high, swing low. And I did so here, right? So I was short from in here, short from around here on the lower time frames, stop up here or whatever, and I cast a net of bids down here, right, in case we were to get a sharp move down, right, which we did. And you can do this on, I believe you can do it on Bybit. I use Insilico terminal, love Insilico. If you're able to connect to Insilico via API, then very much recommend you do so. It's basically where I've done my trading for the last however many years. And basically what this does is I use a function where it casts, I think, like 30 to 50 different bids in this case, right? So they're all done with equal weighting, equal measure. So basically if price moves through these, then I get filled at the median. the average here. And yeah, essentially what I'm using that for is to just catch very fast moves, whether that's for entry or exit. So in this case, we're talking about exit. Merl was a recent trade that I did on the lower time frames for entry. Okay, so it was like so. Price was moving up ferociously, right? So it's like whatever it was, 163% it topped out on within the space of a couple of days, sort of thing. Given that, right, I was like, okay, cool. I have very, very high conviction in this high being taken out here, this final high, and price reversing because it's doing so with speed. Now I keep that net there, right? It was something like, I can't even remember what it was, something like this. Let's say I think I covered this on the stream with EXO a few weeks ago, if you want to look at it in more detail. But I would have set this sort of trap of asks at this point here. So well before price reaches this area, I'm setting these asks here, okay? Now, if the next day I'd seen price do something, or within the next couple of days perhaps, I've seen price do something like this, right? And then start moving up higher, I would have removed these, right? I'm only keeping them there on the premise that price is moving incredibly fast, way too fast and way too inefficiently towards my asks or bids, right? So what I want to be seeing is price to continue, right? Just do this straight up, right? Straight up, fill me as we go, right? And it's a really nice way to sort of be hands off, okay? When you're administering this type of system, you have to also use relatively wide stops, okay? So something like this perhaps, and you want to play it back down here or whatever it is. But yeah, keep the nets fairly wide, I'd say. And what may happen is you may have price come up, right? You've kept them there because it's still going up very sharply, and then price does something like this, puts in a little lower time frame divergence, and then starts moving down. Well, then what's happened is you've been filled up to this degree. Okay, so you've been filled up to here. Okay, so you've caught all the asks from, let's say, here to here. I'll paint it slightly differently as that looks misleading. So you've been filled with all of this. Okay, let's say you're filled for 60% of your total size. And then what you can do is you can either hone into the lower time frames here to look for a separate trigger in what I call no man's land. No man's land is past the sweep high, the swing high or the swing low without locking back under. So you can look for that divergence confirmation and say, okay, cool, I've been filled for 60% of my size. I'll then reallocate the extra 40%, cancel these, reallocate the extra 40% and take the lower time frame divergence trigger in here. Or you can play it more cautiously and wait for that deviation, wait for that breakdown, and then wait for a candle close back past the level and take that second installment here. Does that make sense? Pablo, do you think the monthly RSI bear div on BTC is close to resetting now? Yes, it is. It's close to resetting. That doesn't mean that it will reset, but it's close to the 50 level. Anyway, I hope that helps answer your question on scaled orders and how I use them to execute. In terms of my regular execution, I'm almost always using limits anyway, by form of chaser orders. Okay, so if you're not familiar with chaser orders, definitely get familiar. They're by far the most effective way of executing your orders. Chaser orders basically mean that price, well, your bids or asks track price and they hover around them by way that even just the tiniest bit of volatility on the lower time frames like this, fills your order, and you get filled just as the same as if it were a market order. But you don't have to pay any of the fees that are associated with market orders, and you also, if you're dealing with larger size, don't have any slippage issues as well. Okay, next question is about confluence. I don't really understand confluence. When do I need high confluence and when do I need low confluence? You say I should always focus on A-star setups, but then sometimes I can have high grading and low, which completely confuses me. Okay, that's fair enough. So let's say that this 1 minute chart here is actually the daily chart on Merlin. Okay, so a clear trending market, right? And it's raging. It's a very strong uptrend here. Okay, in these conditions, I administer low confluence. Okay, because the trend is strong. So the stronger the trend, the lower the confluence. The weaker the trend, and that's not to say by weak I don't mean a downtrend, but the more, let's say, the more non-directional a trend, if the market's doing this instead and it's just range bound, then I will need high confluence. Okay, and that's the way that I sort of operate. Okay, so highly trending, either to the upside or the downside. You can use low confluence. Okay, so in this case, even just looking at this example here on price, you could just simply take a breakout trade here, okay, and say this is your breakout level. You're looking, you've got a sweep of the lows down here as confluence, okay, so a little bit of confluence. Let's say that price took it out a bit more forcefully. You've got a breakout level here with 4 touch points. You've got consolidation prior to the break. Bear in mind, this isn't a textbook breakout. Obviously, I'm just riffing on what I'm seeing here on price. But you're just simply taking a breakout trade here, whereby you're looking for the candle close, stop the other side of consolidation, and trade it for 3R or whatever it is. Okay. In range bound markets, such as the above here, yeah, you really want to see a lot of things line up. Okay, so you could take something like this, right? So let's say you've got range high here, okay? You've got a deviation up here, but just as with the ETH trade we were looking at earlier, or the ETH price action, okay, go back to the 2 hour, you can see the same thing. You got your range here, you bust up, you've got the 2 hour divergence in here, okay, and then we close back down. We also kind of do so into this cluster of price action here, but let's say the same thing happens here, okay? So you got price moving up, it diverges past the range high. Let's say it does so into supply zone up here, okay? So you've got multiple things going on. You've got, let's say it also does so with speed, right? Like we were seeing with Merl. So it does so with speed. So you've got speed, you've got a deviation, you've got a divergence, you've got supply. Just to give an example, this is obviously an incredibly stacked trade in terms of confluence, but these are the sort of trades that I'm looking for and the levels of confluence that I want to administer when price is more bracketing, more range bound and non-directional. When price is highly directional, and it's a linear scale. So the more directional prices, the less confluence, the less directional prices, the more confluence, okay? If you can just think about it in those terms, then it will serve you well. I keep finding myself backtesting different systems, thinking I have an edge, realizing I don't, and then starting again and feeling like I'm not going anywhere. What am I doing wrong? Tricky one to answer, but I think my best advice is to, and I put this in my recent video, master one kick as opposed to mastering 1,000 kicks. Okay, so it's that old aphorism that you need to lean into. Essentially, you need to find a system which suits you, which resonates with you, and then from there, it's basically just a case of just practicing it over weeks, months, years, back test, forward test, back test on the same time frames that you're operating on. So one of the common pitfalls I see is, people want to trade on the 4-hour or the daily to increase odds of success leaning into the higher time frames, but then they'll be back testing on the minute chart. It's not something you should do. It's a very dangerous game, and take it from someone who lost years, wasted years doing that. Not something I advocate. Unfortunately, with that, obviously, most of the testing you're going to be doing is going to be forward testing. And if you are trading the higher time frames, then it's going to be rare and few that you get trade opportunities. For me, even with my system, sometimes it's once a month. Okay, but that's the harsh reality of it, right? It's not a get rich quick scheme. This game takes ages, right? It takes a long time, which is why I also advocate having other things going on in your life, right? Especially if you're into swing trading, position trading. Having a full-time job is a good thing. Having a side hustle is a good thing. Having hobbies, having a life outside of trading is a good thing. Essentially, you just set your alerts, wait for them to hit, and rinse and repeat. Okay, but the opportunities will be rarer, of course, but that's something that you're just going to have to deal with. You're just going to have to be more patient with it all. Which I honestly, I see as no bad thing, right? Some people are like, oh shit, I want to make it now. It's like having that patience and having that sort of cadence in your activity in the markets, and just having that diversity with a job, right, or a side hustle, just makes it so much healthier. Makes it so much healthier. Take it from someone who's got a stomach condition, ongoing health conditions off the back of being too intense in the markets, being too stressed out. Yeah, don't be like me, right? You don't want to be stuck on the 1 minute. You don't want to be stuck on order flow, footprints, non-time based rotations, tick charts. Losing yourself in the screens and the charts is not a healthy way of operating, and it's a bit of a trap, to be honest. It's a trap for your health, your happiness, your longevity, and your odds of success in the markets. I think I'm one of those rare people that ground themselves down to the bone, came out with a health condition, went through such severe pain and turmoil, but then managed to turn it around just because I'm incredibly stubborn. Incredibly stubborn. But yeah, I don't want you guys to make the same mistakes as me. So I hope all of my educational content, trying to have you guys at least, even if you're not learning through secondhand experience, even if you're just picking stuff up and forming ideas, at least, some sort of influence, then I'm happy. Good night, Jervin, and I won't delete it, don't worry, you can keep watching this whenever you want. I really like the RSI-based system, this is from Pablo in the chat. I really like the RSI-based system, but I'm always getting tempted to take other setups. How did you stop yourself? So I was the same as you. Always tempted by other systems, always tempted by other setups. How did I stop myself? Through despondency, through getting burnt a million times, basically. Which is again another reason why, like I say, why I want to put this content out. I don't want you to come out with third-degree burns like me, whether they're third-degree burns on the skin or, in my case, inside your stomach. Yeah, just if you can, just try and just abstain as best you can. Put some rules in place. If you feel like you're sister popping, if you feel like you're dancing in that position, if you feel like you're doing all the things that you shouldn't be doing, then just put some hard rules in place where you have to take yourself away from your desk, go for a 20-minute walk, a 30-minute walk. Yeah, it's like an addiction. It's really the same part of your brain that fires on. You know, I want another line of Coke. I want another drink. I want another spliff. I want another whatever it is. You have to find ways to, to make your abstinence work, right? And if that's putting hard rules in place where you walk away from the desk, close the laptop for the day, whatever it is, you have to work it out yourself. I don't know how your mental makeup is structured, so it's very hard for me to sort of advise you. And also, it wasn't something that I was particularly successful with because I was very poor at it. Now you see me in a state of very high discipline, stringency, patience, all of that sort of stuff, which I'm preaching to you guys day in, day out on the YouTube. But if you saw me at the beginning, I was worse than all of you at all of these things, right? System hopping, all the stuff that I teach, I fell victim to, and I did so in a very bad way. So, although I can tell you not to do it, how not to do it is something that you unfortunately need to work out yourselves. T, do you latch onto trends? For example, BTC just bottoms from here without putting on 3-day divergence and we miss the trade. Where should we look to join the trend? Or does your system leave you out of? Yeah, good question. Basically, I'll make that move once the trend sort of confirms itself. So for me, and it's not being greedy per se, it's again just being hyper stringent. Okay, so let's get rid of this replay. Yeah, it's not being greedy, it's just being hyper stringent. So for me, the div isn't well structured enough, right? So I like the double confirmation across the RSI and the awesome oscillator. I like the prices moving into good left side confluence in terms of a higher time frame liquidity zone, in this case origin demand. What I don't like is that this isn't hyper overextended, right? At least come down to the 30s for me. The fact that we're just tapping down to 33s, not great, okay? But if we start pushing away from here, which we very well may, okay? We reclaim up here, put in some sort of reclaim. Most importantly, reclaim the mid, which makes the divergence situation off the table, okay? So on the 3-day, we reclaim. We can see how pivotal the 3-day midpoint has been throughout this entire piece of price. Yeah, so basically just reclaims, and then I'll just look to play the longs. Okay, it's as simple as that. I know there's a lot of talk about, and this was the scenario that EXO was looking at, in terms of pushing up from here and then moving into this supply zone here, right? There's a new cluster which is formed here. Okay, so it does make things quite tricky because at the moment we're sort of bouncing from, if we did bounce from here, we'd be bouncing from a weekly demand zone, but then not much room for activity until we move up into the monthly supply zone. Okay, so it'd be one of those cases where it's very awkward in this case. Okay, but normally I'll only move into, to answer your question more generally, I'll only move into to sort of catch the Pico lows or the Pico tops, right? Here we're looking at a long from demand. I'll only look to sort of nail this if I have very, very high conviction, which I don't at the moment. If not, I'm just waiting for the trend to confirm itself, and then looking to join the trend by way of, I don't know, whatever the setup is. Let's say here we form, ignoring the monthly supply zone, just generally speaking, talking about, from an educational perspective, let's say we come up here, we form a demand zone, intra-demand, we then move back down into that demand zone. Then I'm looking to take the long setup, okay, as a separate play to this entirely, okay, now that I've got a more confirmed trend on my hands. I don't like operating at the extremes particularly. It's not really where I have much of an edge. Sometimes I do, right? But I have to be very, very certain of things. Okay, so what we were running through the example earlier, This trade I took up here where I was short from this area and here, that was a sort of Pico high trade where I'm looking to nail I'm looking to nail the pivot before the trend confirms itself. And the only reason I was able to do so was by means of, again, going back to that, topic of confluence, extremely high confluence here. We had like a 4-hump structure on the AO, which is very, very rare. Diverging structure across the RSI, triple drive with wicks up here on price, taking out this high here. I can't quite remember, but I'm sure we had some delta confluence as well. So again, super, super high confluence, everything lining up, and me feeling sort of forced into position as opposed to wanting to be a hero in knife catch. Yeah, I hope that helps. Okay, so what's been your best market to trade, crypto or traditional? At the moment, I'm only paper trading traditional, so still very much crypto. Best market per se would have been hype. Okay, so obviously I ran through the short position I'm in at the moment. It was also spot long from this area of here, if you guys recall. Went spot long 19s, exited spot here. Could have done way better, right? Could have taken it up here, as I covered in the last couple of streams. I wanted to sort of ride this hero or zero. Again, felt forced out of position here as we lost this key level. But also milked a couple of trades at this point here. If you guys remember, it was somewhere in here. Can you do this with a replay? It might have even been here, to be honest. Hourly breakout trade in here, I think. Yeah, come back down, retest. Took this retest or the breakout or something. It was something like this. Anyway, there were a couple of trades that I took and collectively took 30R off the two of them. So between spots, those two trades, and yeah, then the exit was fine. The recent short, it's been 100% strike rate on hype this year. So yeah, I've been happy with my performance, even though could have done better. I don't really have any regrets. Right, there's nothing that I would have really done differently. In hindsight, 2020, fine. I could have exited up at the fucking 50s or whatever. But realistically, I took my sort of stance on hype from a trading and spot perspective. I sort of mapped out exactly how I wanted to trade this market, exactly what my rules were going to be. Executed them pretty much perfectly. And yeah, like I say, like alts could be rallying now. If so, hype would be one of the strongest performers, I have no doubt there. So yeah, everything that I did so as per my system, as per, yeah, I don't really see myself doing anything differently on hype. Everything I executed has been on point so far. So yeah, grateful for this market. Pablo, do you have a spot portfolio for long-term holds and a separate trading portfolio? Yes, 100%. They're very different things. Hype was just on my Ravi, right? It's just on my EVM wallet, my cold storage. Obviously not holding any spot anymore, but generally speaking, yeah, they're completely separate entities, completely separate careers. I would go as far as to say they're complete separate sets of operation. Complete different risk parameters, completely different psychological approaches, completely different everything, right? They should never be merged. Treat them completely separately. They are very, very different things, very different crafts. I try and explain this to, some of my friends that aren't, normally friends that aren't in the markets, and they don't really understand that it's all the same thing. It's completely different. It's completely different. Okay, the markets are completely useless at the moment. Do you recommend I walk away completely or what? Are you still even trading? Question mark, question mark, question mark. So I am trading, but as I've covered, the trades that I'm taking are despite hype, which is fine. You know, obviously I've got a very ambitious take profit here, right? I'm not saying this is where I'll close. I may close down here. Who knows? Okay. But generally speaking, I'm trading breakdowns at the moment. Like I covered earlier, until the 3-day div locks in, I'm trading breakdowns and I'm trading low R breakdowns. Okay. You know, I could have taken this position here and placed my stop here and then doubled the R. It's not what I did because, you know, that would be a greedy move, right? So everything that I'm doing at the moment is low R because I'm sticking to, you know, getting rid of the ego, getting rid of the greed, all that good stuff that I try and teach you guys. And yeah, it's not particularly profitable, right? It's not particularly fruitful because I'm not nailing 30R trades or anything like I was earlier on in, you know, the hype market earlier on this year. But it is what it is. I'm still active. I'm operating as per. I keep saying operating as per my system. It's not operating as per my system per se. It's operating as per how I want to be operating. Okay, as a trader, I want to be, you know, keeping stress low. Keeping our, I wouldn't say keeping our low always, but, you know, keeping risk in check and, you know, allowing some buffer room for volatility, not keeping my stops too tight. You know, all the stuff that I teach day in, day out, I do it myself. But yeah, as to your question, I'd still be active. Right, just don't be, you know, going back to that conversation earlier about not being black or white. It's very good to remain active, even if you're just scanning for 10 minutes every day, even if you're just turning up to my streams or whatever it is. You know, that level of activity is great because even if you're not trading for 6 months, what you're doing there is you're proving to yourself that you've reached a new level of discipline. And I won't say it again because I say it 10 times every time I stream. But discipline is the most important thing that you guys need to be focusing on. Underneath that umbrella of discipline, patience, stringency, all of that stuff. What's included in your Discord group and what if I don't like it? Okay, so daily analysis, weekly streams, you get access to all of my templates. Get a pretty fun community in there. Everyone that joins says that they love it and they're, you know, happy to have found it. It's very close knit, a lot of friendly faces to help you out. It's essentially just a space where, you know, it's not so lonely. Trading doesn't have to be so lonely, so isolated. And there's a 7-day trial. So if you want to just test it out, you've got nothing to lose really. I don't know if I have what it takes to make it as a trader. I watch your content and you seem to make it out as if you have to be a unicorn to get anywhere, which is ridiculous. Surely this isn't true. If I was to analyze myself, which are the most important traits I would need? Well, I've kind of just answered that by saying discipline. I'd throw grit in there as well, right? So grit and discipline. If you want to focus on two sort of mental capacities, faculties, whatever you want to call it, day in, day out, which is 100% what I recommend you do, as opposed to looking for the next best indicator or trading style, which is what everyone does. This is what I did, right? You want to find that magic line in the charts, you want to find that next new indicator, optimal trade entries, Fibonacci retracements, you know, that magic number of EMAs, which is going to just fix your trading. Moving over to order flow, market profile, footprints, the list goes on and on and on. Really what you should be doing is fostering and curating the best mental environment for yourself to grow as a trader. And the key tenets you should be focusing on are, in my opinion, my humble opinion, discipline and grit. You'll need those two. As long as you have, you know, you're focusing on discipline and grit as much as possible, then you're doing good, right? That's as long as you're focusing on those two, then you're doing good. If you could only trade one setup over and over, which one would it be? I mean, that question's basically asking me to paint my perfect setup. So I don't know, let's say it's kind of like the Merl stuff we were looking at earlier, but let's say raging uptrend, right? Raging uptrend. Demand zone in here. Okay, so maybe something like this. So demand zone forms on the way up. Let's see, this is kind of misleading, so I'll do this. Or this could be supply, doesn't matter, right? Liquidity forms, raging uptrend, you get super sharp move down, right, into this cluster of demand here. So it's cluster in price. We also have a divergence here. Let's say there's also a key low here, right? So it's, oh, fuck no. So we're sweeping a key low, like so. So the lows here. So we're sweeping a key low into demand with speed, with a bullish divergence here. Okay, so lower lows on price, higher lows on the oscillators. I mean, if I could paint the perfect, and then we also have high delta, right? So let's say we're looking at BTC, we have high negative delta here on the first leg, relatively high negative delta here on the second leg, but not quite as high because it never is, and just general absorption, right? So just like multiple bars of negative delta here. Excuse my ratchet drawing skills, something like that. Take the divergence confirmation candle, right? I'd be happy to be very aggressive in this case and not wait for the sort of reclaim. Take the first strong divergence confirmation candle. Let's say it's got a nice tail to it as well. I mean, this is just one example, right? There are multiple A-star setups, but I mean, this is sort of harmonizing everything in my system. Something like that. Stop the other side of, yeah, or a bit more buffer room perhaps. It looks something like this. Okay, so that's pretty much it for the questions. Pablo's got one more. Thoughts on XMR? Yeah, XMR looks great. I've been talking about this a lot in the cord. So we're sort of here. Well, it's a very janky level here, but we've forcefully come through this. And, you know, even despite yesterday's daily candle here being very nasty, we basically just pushed up against this. If you're looking at the 4 hour, it looks clean as well. Okay, so touch point, touch point, touch point, broke through the diagonal with consolidation, come back, retested here, exactly on the trend line, moving up. It looks strong. It looks very strong. Okay. If you're going to be long any market, be long XMR. Not financial advice. Wasn't your H4 bear div top short on BTC and A-star setup? 100% it was. Yeah, even potentially better than what I just showed you. Yeah, no, because you had the 4 humped AO structure. Even triple humped is a rare pattern, but when it forms, it is again a bit of a unicorn. So yeah, one to pay attention to. Triple drives, delta, all of it, right? All of it. Okay, peeps, that's me for today, and that's me for the year. So unless you guys have any more questions, time for me to clock off and yeah, spend the day with my fam. All right. Yeah, catch you in the new year. Take care, guys, and